Profitable traders, how do you find your edge in trading? Let me show you. So hey guys, Steven here. Now, I've been shooting a lot of videos recently about this concept of mathematical edges in trading. And after the past couple of videos that I shot, I got a bunch of emails from people wanting to explore that a little bit more. And the example that I always give is the one in blackjack. It's the one that resonates really well with the most amount of people, so I'm going to start off with that. In the game of blackjack, the house pays you when you win, minus getting actual blackjack. When you get blackjack, you get slightly more than you bet. But every other time that you win in blackjack, the house pays you what you bet. So if you bet $25 and you win and it's winning without getting blackjack, the house will pay you $25, right? This means that they pay you as if you win 50% of the time, but because you go first or before the dealer even gets to act, you can bust or go over 21 before the dealer even plays their hands, regardless of the outcome that would have been. So even if the dealer would have potentially busted as well, because you get to go first, right? Because you get to go first, that really changes everything. Because you go first, you win slightly less than 50% of the time, right? So the idea is, in blackjack, because you get to go first, because you take action first, and you can lose before the dealer even plays, that gives the house a mathematical edge or a mathematical advantage of 0.43%. That is less than half of 1%. That's not even 1%. And as you know, casinos do not lose money. The reason that they do not lose money is because they have literally a mathematical edge. They have rigged the game in their favor. So yes, you as the player, you as the gambler, you may win sometimes. You may go on really big heaters. You may lose sometimes. But over the long run, you lose. Now, because you as the player, as the gambler, go first, you can bust first, thus giving the house a small edge that makes you losing money and them making money a mathematical certainty. I'm going to repeat that a couple of times because I really want that to sink in for you. Because you go first and because you can bust first, you understand that. That gives the house a mathematical edge. Because the house has a mathematical edge, you losing money and them making money is a mathematical certainty. Now, if this is kind of your first time being introduced to me, my name is Steven Brooks. I've made well over 7 figures trading for myself. This is a screenshot from my account yesterday. Over the past 1 month, up a little bit better than $100,000. And over the past number of years, I have taught thousands and thousands of traders how to be much more successful. And the cool thing is, I've worked with over 6,000 traders at this point, and regardless of their background, that doesn't matter. Regardless of how much money they start out with, which doesn't matter. Regardless of how much time they have on a given day to devote to trading, that doesn't matter. There's only one thing you need to get when it comes to trading. And if you get this one thing, you can do horribly. You can botch. You can mess up everything else, and you'll still probably do really well. And if you don't get this one thing, it doesn't matter if you're like a rocket scientist, if you're the smartest person who ever walked the planet. If you don't get this right, it's going to be a big uphill and losing battle for you when it comes to trading. And that one thing is a mathematical edge. If you have it, you win. If you don't have it, you lose. Remember, when it comes to blackjack, there is a mathematical edge in every single time the house, the casino, deals the cards. There is a real quantifiable and measurable mathematical edge every single time they deal. So you as the player, again, you will have pockets in there where you make money, but overall, you will lose money. Trading is really no different, and I don't understand why literally everyone and their mother doesn't talk about this, because as a trader, if you have the edge, the result of you making money very much becomes inevitable. And if you don't have the edge, that means similar to blackjack, there's an edge working against you, and mathematically, you losing becomes a certainty, becomes inevitable. Now, what is edge in trading? Well, the market is supposed to be, and I put that in quotations there, the market is supposed to be perfectly priced, right? We are told that the smartest people in the world, these PhDs, these quantitative people, right, who create all these algorithms. We're told that 80% of the market is driven by algorithms. We're told that the market is always smarter than us. The market is never wrong. The market is so perfectly priced. We're told all these things. And if all these things were true in reality, there would never be an edge in the market. Right? So if it's true that only the smartest people participate in the markets, the big players are the ones who move the markets, they're the smartest people, they hire all these kids out of Yale and Wharton and pay them millions of dollars, and we have all these quants and all these algorithms that make all this money, we are told that. And if all that is true, something like this, which is what you see in blackjack, should not exist. Or at a minimum, if it is true that the smartest people in the world are pricing the market every single second of every single day, and they are able to take in every single bit of data in the world at any given time to be able to price the market absolutely perfectly, this example cannot exist in the market. There should be no edge either way if it is true that the market is never wrong and that the market is perfectly priced. This example should not be able to physically exist in the market. So, the most basic trade that I've ever taught anyone that comes with an actual physical real measurable and mathematical edge is known as the 80-20 trade. The concept is this. Rather than worrying about what the chart says or what you think the chart says, what the indicators say or what you think the indicator is saying, rather than worrying about what Jim Cramer says, what some analyst on CNBC says, what somebody you saw on Twitter says, rather than all that stuff, ICT, supply and demand zones, regardless of all of that, the 80-20 trade is a physical, actual trade where the actual physical trade itself comes with a mathematical chance of winning 80% of the time, or an 80% probability of making money. Now, if the market is perfectly priced, if the market is never wrong, if the market is only filled with the smartest people in the world, then this 80-20 trade where the physical actual odds of the trade being successful on its own, regardless of the chart, regardless of the stock, regardless of the Fed, regardless of any stupid indicator, this is what the results should look like. We should have an 80% win rate, right? If the odds of the trade being a winner are 80%, then the win rate at the end of the day should be 80%. Now, we should also make no money. This is a 50-day trade, but we should make no money each day and no money over that 50-day period. So basically what we did here was we did this trade, this 80-20 trade. We did it every single available trading day. There's about 250 available trading days every year. We did this trade every single day, rain or shine, since 2005. So almost 20 years that we've been modeling this trade every single day. We did it every day. We did not care who the Fed chairman was. We did not care who the president was. We did not care who had earnings. We did not care about a jobs report. We did not care about inflation. We didn't care about anything going on geopolitically. We literally cared about nothing other than, am I putting this trade on today? Much easier way to live, right? Much easier way to trade, right? So again, it's supposed to be a wash, an 80% win rate with a wash. It's supposed to be we win 80% of the time and we lose 20% of the time, and those losses will offset that winning 80% of the time. Basically, the losses will be 4 times, or actually, let's see. Yeah, that's right. The losses on that, in the 20% of the time that there are losses, that is supposed to be 4 times larger than the 80% of the time when we win, and everything comes out to be a wash. We should also make no money, right? This is what's supposed to happen. And again, if it is true that the market is always perfectly priced, this is supposed to be the case, and we should never see some sort of a mathematical edge in the market at all. But as it turns out, as you probably could have expected, that is not true. Doing this trade every single day, rain or shine, regardless of our market opinion, regardless of any stupid indicator, we end up winning 85.95% of the time. Now, because we're supposed to win 80% of the time and win nothing, when we do win almost 85.95% of the time, well, we end up making about $40 per trade, which on this particular trade is a little bit better than a 10% return. We still are in the trade for the same length of time, but because there is a positive return on this, which, by the way we come up with this is we take all the wins, we subtract from the wins all the losses, and then we subtract from the losses commissions and slippage. So even though we did not personally do these trades every single day since 2005, I didn't start trading until 2007 myself. We wanted to model it as similar as it would be if you did do those things in the real world. So we do have to factor in commissions and we do have to factor in slippage as well. But again, this is what an edge looks like in the market. We're supposed to win 80% of the time. We're supposed to make nothing, but instead we do better 85.95% of the time, and we make about $40 per trade, which again, based on the amount of risk that there is on this trade, that's a little bit better than 10%. Now again, if it were true that the market is perfectly priced, again, we should only been winning 80% of the time and not making any money. But because the market is not perfectly priced, the 80-20 trade comes in with the real quantifiable and measurable mathematical edge. Now, here's the really cool thing. It's better than blackjack. Blackjack has a 0.43% mathematical edge on every single hand that we deal, and the 80-20 trade comes with a 5.95% mathematical edge. 10 times greater, more than 10 times greater, like 13, 14 times greater than blackjack. Blackjack, the house does not lose unless somebody's cheating. If you do the 80-20 trade enough, it is going to be very, very, very difficult for you to lose. And quite frankly, the only ways for you to lose if you do something like the 80-20 trade that has a real mathematical edge is risking way too much or not doing enough trades. That's it. Literally, that's it. If you risk too much, this may not work out for you. If you don't do enough trades, this may not work out for you. In all the other scenarios, if you do it correctly, it is very difficult to see how you are unsuccessful doing this. And here's my favorite part. When you finally have something that has a mathematical edge, a lot of traders, what they spend their times on a given day is ridiculous. I can't even imagine how or why traders think that the way they go about it on the average on a given day makes any sense. Because most people on a given day are like, what stock should I trade? What does the news say about the market? I read the paper for an hour this morning, and now I'm going to take that information that is, first of all, it's not even real, it's biased. It's based on how the paper would like you to think. Right? What's going on with earnings? What's going on with the next Fed meeting? This indicator that sucks. What does it say? You don't need to worry about any of that stuff when you have an edge. Why? Because all you care about is how I can do the things that give me the edge. And the question is, how can I do more of these? So think about this on a given day. You wake up, and instead of being in your Discord group, thinking about what people are going to do, instead of reading the news, instead of seeing what stocks are up and how does that compare to other stocks in the sector, you just say to myself, how can I do more of the thing I already know how to do? What is easier? Exactly. Now, as kind of a recap here, and there we go. As a recap here, the casino is not worried about any trend. Right? The casino is not worried about who sat down at the table. The casino is not worried about what happened on the last hand that they dealt. What happened over the last day that they dealt the cards. They don't care about any of that. The only thing they give a shit about is, how can I deal more hands? The more hands I deal, the more the inevitable result of them making money as the casino, the more it is likely to become a reality. When you trade with a mathematical edge, all of these things you think you care about on a given day that have gotten you the result that you are not looking for, those just kind of vanish, right? All those things you think about on a given day, you just stop thinking about them. And the only question you ask is, how can I do more of these? Remember, the casino is not thinking about how can I deal the cards better. The casino is not thinking about how can I get dumber people to play blackjack. The casino is thinking about how can I deal more hands. Why don't you do that when it comes to trading? It is perplexing to me that almost nobody talks about this, because if you get the edge on your side, which is what the 80-20 trade is, if you get the edge on your side, the only question is, how can I do more of these? Why is that the question? Because in the micro, if you do 10 of these trades, you may not be profitable. But in the macro, if you do 100 of these, it becomes much more difficult for you to be unsuccessful. If you do 200 of these, which is just one a day, by the way, it becomes even more statistically difficult for you to be unsuccessful. So you tell me, what's easier, being the house in blackjack, or not what's easier, what makes you more, being the house in blackjack or being the house in the game of the stock market, which is having a mathematical edge on your side. Now, if you're interested in learning about the 80-20 trade, or quite frankly, ones that are far superior than what you've seen here, go ahead and click on the link I've added to the description of this video. It's going to send you on over to a page where there's going to be a 10 or 15-minute training on a little bit more about these mathematical edges. If you want access to this very document, I've also linked that below in the description of this video. If you like what you saw here, go ahead and give me a like. Go ahead and share this with your friends and family. Go ahead and subscribe and click on that bell so you're notified every single time I post a new video. But at the end of the day, trading can be really easy if you wanted to. Why can't you be the house like the casino is? The casino has a real mathematical advantage. How do you think someone that speaks like me can make $118,000 in 1 month? The only way that's possible is to have a real quantifiable mathematical edge when it comes to trading. If you get this right, you could be a dummy like me and make a lot of money. If you get this wrong, you can be the smartest person in the world. It's going to be really difficult for you to be successful and for you to make money. And instead of worrying about all these ridiculous things that you worry about on a given day, all you worry about is, how can I do more of these? And thus, the inevitability of success will happen for you, and it will happen quicker just by doing this more. Just like a casino, if they deal 1 hand an hour, who knows how it's going to go? But if they deal 100 hands in an hour, they know exactly how that's going to go. Make your results inevitable. The way to make your results in trading inevitable is by having a mathematical edge on your side. And again, if you want to learn more about that, go ahead and click on the link I've added to the description of this video, and I'll see you in the next one.